Ah, good morning, esteemed audience. Today, I present a rigorous and scientific analysis of Avino Silver and Gold Mines Ltd., ticker ASM, a Vancouver-based mining company listed on the NYSE American and TSX. This analysis evaluates the company's sectoral activities, financial performance, strengths, weaknesses, key figures, and auditor motivations, culminating in a critical perspective to inform investment decisions. Avino Silver and Gold Mines Ltd. operates exclusively in the precious and base metals mining sector, with its core activities centered in Mexico. The company's flagship asset, the Avino Mine, located near Durango, Mexico, produces silver, gold, and copper. Additionally, Avino holds 100% interest in the La Preciosa project, a development-stage silver and gold property also in Durango, acquired in 2022. The company's operations encompass exploration, extraction, and processing of mineral resources with a strategic focus on expanding production capacity through organic growth and project development. Avino controls a district-scale land package with mineral resources totaling 371 million silver equivalent ounces, as per National Instrument 43-101 standards. The company also maintains minor exploration interests in British Columbia and Yukon, Canada, though these are not significant contributors to current operations. The financial performance of Avino in 2024 and Q1 2025 demonstrates robust growth, driven by operational efficiency and favorable metal prices. In 2024, Avino reported record revenues of $66.2 million, a 51% increase from 2023, fueled by a 10% rise in silver equivalent production to 2.65 million ounces. Net income reached $8.1 million, or $0.06 per share, with adjusted earnings of $10 million, or $0.07 per share. Cash flow from operating activities surged to $23.1 million, a 1,400% increase, enabling a record cash balance of $27.3 million, up 916% from 2020. Earnings before interest, taxes, depreciation, and amortization (EBITDA) were $9.1 million, reflecting a 712% improvement. Cost metrics improved, with cash costs per silver equivalent ounce at $14.84 and all-in sustaining costs at $20.57, down 5% and 6%, respectively. In Q1 2025, Avino sustained this momentum, posting net income of $5.6 million, or $0.04 per share, and working capital of $31.3 million, up 24% from year-end 2024. Silver equivalent production rose 8% to 678,458 ounces, supported by improved grades and recovery rates. Several strengths underpin Avino's performance. The company's debt-free balance sheet is a rarity in the capital-intensive mining industry, providing resilience against metal price volatility and economic downturns. Record cash reserves and strong cash flow generation position Avino to fund organic growth, particularly the La Preciosa project, which is on track to contribute to production in late 2025. Operational efficiency is evident in declining per-ounce costs and improved recovery rates, reflecting disciplined cost management. Avino's focus on sustainability, including a dry stack tailings facility and a third consecutive ESR designation for social and environmental responsibility, enhances its social license to operate. The company's 38% compound annual growth rate (CAGR) over 5 years, coupled with a 232% share price increase in the past year, signal strong market confidence and momentum, as evidenced by a moving average score of 100 and a technical score of 75. However, significant risks and weaknesses temper this positive outlook. Metal price volatility remains a critical concern, as silver, gold, and copper prices are influenced by macroeconomic factors such as interest rates, industrial demand, and geopolitical tensions. For instance, a decline in silver prices from $31.34 per ounce in Q4 2024 could erode margins. The La Preciosa project, while promising, carries execution risks, including capital overruns and operational challenges in underground development. Avino's production decisions are not based on NI 43-101 compliant reserve estimates or feasibility studies, increasing uncertainty and economic risk, as acknowledged in the company's disclosures. The stock's price-to-earnings ratio of 40.3, compared to the industry median of 22.4, suggests an elevated valuation that may be vulnerable to correction if growth slows. Regulatory risks, including potential changes in Mexican mining policies or U.S. border closures, could disrupt operations. Currency fluctuations, given Avino's U.S. dollar reporting and Mexican peso-based costs pose additional financial risks. What motivates the auditor in evaluating Avino's financial statements? The auditor, likely a firm with expertise in mining, seeks to ensure compliance with International Financial Reporting Standards (IFRS) and U.S. GAAP, given Avino's dual listing on the TSX and NYSE American. The auditor's primary objective is to verify the accuracy of reported figures, such as the $27.3 million cash balance and $8.1 million net income, to provide assurance to shareholders and regulators. The auditor scrutinizes non-IFRS measures like adjusted earnings and all-in sustaining costs, which are prevalent in the mining industry but require transparent reconciliation to IFRS metrics. The absence of NI 43-101 compliant reserve estimates raises questions about the reliability of resource valuations, prompting the auditor to assess management's assumptions rigorously. Additionally, the auditor evaluates Avino's internal controls over financial reporting, particularly given the significant cash flow increases and working capital movements, to detect any material misstatements. The auditor's role is critical in maintaining investor confidence, especially for a company with a high PE ratio and ambitious growth plans. In conclusion, Avino Silver and Gold Mines Ltd. presents a compelling yet nuanced investment case. Its debt-free status, record financial performance, and strategic growth initiatives, particularly at La Preciosa, position it favorably in a rising precious metals market. However, risks tied to metal price volatility, execution challenges, and an elevated valuation warrant careful consideration. Investors must weigh Avino's operational strengths against its exposure to external uncertainties. For those with a high risk tolerance, Avino offers leverage to silver and gold price upside, but diversification remains essential to mitigate sector-specific risks.